Hey everyone, welcome back. Today we're going to be, diving deep into a book that's kind of a classic
Hmm.
in the investing world, and that's The Little Book of Common Sense Investing by John Bogle. And
Yeah.
this book, it really cuts through all the noise on Wall Street,
Yeah, absolutely.
and gives you some really, I don't know, refreshing advice
Yeah.
on investing. And
It's a great book.
so we're going to be looking at why it's become like a go-to, especially for people who want to make,
Right.
smart choices about their money,
Hmm.
but don't want to get lost in like all the complexities of the financial world.
Yeah. One of the things that's so interesting about Bogle's approach
Yeah.
is it's almost like he flips the script on us.
Mm-hmm.
Instead of promising quick riches or secret formulas.
Yeah.
He's really advocating for simplicity and long-term thinking.
Mm.
And this resonates so deeply, I think, with, you know,
Hmm. Yeah.
the everyday investor
Yeah.
who's looking for kind of a reliable path
Yeah.
to financial well-being.
It's like he's saying, forget the hype. Here's what really works.
Oh, right.
And one of the things that he's really big on is making investing simple and inexpensive.
Right.
And I think that that's pretty refreshing to hear. Like
Yeah.
especially when you think about how complex the industry can often seem.
Yeah, I mean, that's a really key point. The
Mhm.
financial industry, sometimes it feels like it thrives on complexity,
Mhm.
and it can feel very intimidating for, the average person. Like
Right.
you need a PhD in finance just
Yeah.
to understand
Yeah.
like your own portfolio.
Right.
But Bogle argues that simplicity is not only easier,
Yeah.
it's often more effective.
Mm-hmm.
And he really pushes back against the idea that you need like complicated strategies
Yeah.
or you need to, pay these expensive advisors to
Right.
be successful in the market.
So he's really all about empowering people to take control of their finances
Exactly.
without feeling overwhelmed.
Yes.
It's like he's handing you the keys and saying, like, you could drive this yourself,
Mm-hmm.
you know?
Mm.
And one of the main vehicles he recommends for doing that is the index fund.
Yeah.
And he has his favorite quote. He says, don't look for the needle in the haystack,
Right.
just buy the haystack.
Love that quote.
What's your take on that?
Well, I see that quote as like a powerful metaphor
Mhm.
for understanding kind of the core of his philosophy,
Okay.
which is instead of trying to pick
Sure.
individual stocks that you think are going to outperform the market,
Yeah.
he suggests that we should invest in a diversified portfolio
Mhm.
that mirrors the market as a whole. And that's really where index funds come in.
Yeah.
They allow you to own like a small piece of every company
Mhm.
in a particular market index,
Yeah.
like the S&P 500.
Instead of betting on one horse, you're betting on the whole racetrack.
Yeah, exactly.
What makes that a smarter approach, though, than trying to pick,
Yeah.
individual winning stocks?
Well, there are several reasons why this makes sense.
Okay.
Firstly, index funds provide built-in diversification.
Mm-hmm.
So by spreading your investment
Yeah.
across a wide range of companies, you're reducing the risk
Right.
that any single company's bad performance is going to like negatively impact your whole portfolio.
Okay.
Don't put all your eggs in one basket.
Right. Yeah, that makes sense.
That's number one.
Okay.
But there's more to it than just diversification, right?
Yeah. What else is there?
Index funds also tend to have significantly lower fees than actively managed funds.
Okay.
And this is because they're passively managed. They're simply tracking a specific index. So you're not paying for like a team of analysts
Right.
to try to pick winning stocks.
Yeah.
And Bogle was really adamant about this point. Every dollar you save in fees
Yeah.
is a dollar that contributes directly to your returns.
So with index funds, you're not just like spreading your risk,
Exactly.
you're also keeping more of your potential profits.
Yeah,
He really seems to hammer home that point about fees, huh?
he does. And for good reason.
Oh.
Okay, even,
Yeah.
even seemingly small fees
Yeah.
can compound over time and significantly eat into your gains.
Oh,
And,
yeah.
there's a lot of data showing that over long periods,
Yeah.
a majority of actively managed funds actually underperform the market after you factor in fees.
Oh, wow.
So in many cases, investors they're paying more for the potential of
Yeah.
lower returns,
Yeah.
which, I don't know, that seems kind of counterintuitive, right?
It does, yeah.
To me, at least.
Yeah. It does seem counterintuitive to pay more for the chance of lower returns.
Right.
It's like paying extra for slower delivery.
Yeah.
It doesn't make sense.
Yeah.
But let's shift gears a bit here.
Okay.
And talk about something that's always fascinated me.
Yeah.
And that's the idea of compound interest,
Right.
which Bogle actually refers to as the eighth wonder of the world.
He does.
And I've always thought of it as this kind of magical force that can turn small, consistent investments into something,
Yeah.
really substantial over time.
It's powerful.
So how does that magic work?
Well, the magic of compounding is really one of the most powerful concepts
Yeah.
in investing, and it's the idea that your earnings generate further earnings,
Okay.
and that those earnings then generate even more earnings. So it's like,
Yeah.
a snowball rolling down a hill,
Okay.
getting bigger and bigger as it picks up more snow.
Okay, yeah, that's a much better visual
Right.
than the money-making babies analogy
Yeah, we won't go there.
we used earlier.
Yeah.
But yeah, it highlights how, even those small contributions combined with that, power of compounding can really lead to significant growth
Yeah.
over time.
Exactly. And time is the key ingredient here.
Okay.
The earlier you start investing, even if it's with small amounts,
Yep.
the more time that snowball has to, roll down the hill
Yeah.
and accumulate that wealth.
It's like planting a tree.
Yes.
The best time to plant a tree was 20 years ago.
That's right.
The second best time is today.
Exactly.
Yeah, that's a great point.
Yeah.
I think sometimes people get discouraged because they think they need a lot of money
Right.
to start investing.
Yeah.
But even small, consistent contributions, like you said, can make a big difference over the long term.
Absolutely.
Speaking of long-term thinking,
Yeah.
Bogle seems pretty skeptical about trying to time the market
Hmm.
or pick individual stocks.
Yeah.
Why is that? Isn't that like what a lot of investors try to do?
It's true. A lot of investors are, drawn to this idea of beating the market, finding that one stock
Yeah.
that's going to skyrocket and make them,
Yeah.
rich quickly.
Yeah.
But Bogle argues that this is, incredibly difficult, if not impossible to do consistently.
Right.
Short-term market movements are influenced by so many factors that even, seasoned professionals often get it wrong.
So trying to outsmart the market
Yeah.
is kind of a risky game,
It is a risky game.
even for the experts.
Absolutely. And it's not just about, competing with other individual investors.
Right.
You're also up against, Wall Street giants who
Yeah.
have, massive resources
Yeah.
and sophisticated algorithms designed to analyze and predict.
Market trends.
So if we're not supposed to be trying to outsmart the market, what's the alternative?
Well, Bogle advocates for a more disciplined, long-term approach.
Okay.
He believes in creating a diversified portfolio of index funds,
Okay.
reinvesting dividends, and most importantly, staying the course, even when the market gets volatile.
That resonates with me.
Yeah.
It's about making smart choices and then letting time do its work.
Exactly.
Rather than, constantly stressing over
Yeah.
every little fluctuation in the market.
That's right. And that ties back to the idea of,
Yeah.
Controlling what you can control.
Right.
You can't predict what the market will do tomorrow.
Right.
But you can choose to invest in a diversified portfolio of low-cost index funds
Okay.
and let those investments compound over time.
That makes a lot of sense.
But let's be real, staying disciplined can be tough.
Right.
Especially when, the market's throwing those curveballs at you.
Yeah.
Do you have any tips from Bogle on how to kind of, stay focused on those long-term goals
Yes.
when the market's making you want to pull your hair out?
Well, Bogle recognized that, investing is as much about psychology as it is about numbers.
Yeah.
He stressed the importance of understanding your own behavioral biases
Okay.
and developing strategies to counteract them. So, for example, one of the biggest biases that investors face is loss aversion. We tend to feel the pain of a loss much more acutely than the pleasure of an equivalent gain.
Oh, I've been there.
But
panicking and selling at the worst possible time.
Yeah.
Locking in losses. Not my proudest moment.
It's a common mistake.
Yeah.
When the market dips, our natural instinct is to protect ourselves from further losses.
Yeah.
But often that knee-jerk reaction leads to, selling low and missing out on the potential for recovery.
So what's the antidote to these kind of, emotional traps? How can we avoid making those impulsive decisions based on fear or greed?
Well, Bogle's advice was to create, a solid investment plan and stick to it regardless of what the market is doing.
Okay.
He recommends writing down your goals, your risk tolerance, and your investment strategy.
That's such great advice.
Yeah.
It's like having a financial roadmap to kind of guide you through those, inevitable market storms.
It helps you to stay focused on your long-term goals and avoid reacting emotionally to short-term market swings. Another helpful strategy is to focus on, the things you can control, such as your savings rate, your asset allocation, and the fees that you pay.
It's about shifting your focus from those external factors that cause stress to those internal factors that, empower you to make informed decisions.
Exactly. And remember, you're not alone on this journey. Millions of investors have found success with this approach. It's a time-tested strategy that's built on solid principles and a long-term perspective.
It is reassuring to know that there's a whole community of investors who are kind of following this path and seeing success with it. It's like we're all in this big ship together, riding out the waves and heading towards, a common destination, financial well-being.
That's a great way to think about it, There will be storms along the way, but by staying focused on the long term and trusting in a sound strategy, you'll be well equipped to reach your goals.
Okay.
And that brings us back to one of Bogle's most important concepts, the magic of compounding. We touched on it earlier, but I think it's worth emphasizing just how powerful this force is.
I agree. It's almost like a superpower that the investors can harness to build wealth over time.
Right.
And what's interesting is it doesn't require any special skills or knowledge, just patience and consistency.
Exactly. You don't need to be a financial wizard to benefit from compounding. It's a natural phenomenon that rewards those who stay invested over the long term. Think of it like that snowball rolling down a hill, gathering more and more snow as it goes, growing larger and larger. The longer the hill, the bigger the snowball.
Right.
The longer you stay invested, the more your wealth has the potential to grow.
That's a great analogy.
Yeah.
It really, it really drives home the point that time is on your side when it comes to investing. The earlier you start, the more time you have to benefit from that compounding effect.
Right.
But even if you haven't started early, the most important thing is to start now.
Absolutely. The key is to develop a plan, stay disciplined, and let time do its work.
So as we kind of wrap up our deep dive here into the little book of common sense investing, what are some of the most important takeaways you'd like our listeners to remember?
Well, for me, Bogle's message boils down to a few key principles. Keep it simple. Keep costs low, focus on the long term, and stay disciplined.
Yeah.
He encourages investors to avoid, trying to outsmart the market or chase after quick riches. Instead, he advocates for building a solid foundation based on diversification, low-cost index funds, and a long-term perspective.
I think that's a perfect summary.
Yeah.
It's not about trying to predict the unpredictable or time the market perfectly. It's about making informed choices, controlling what you can control, and trusting in the power of time and compounding to help you reach your financial goals.
Exactly. It's about empowering yourself to take control of your financial future and build a more secure tomorrow.
And I think that aligns perfectly with, the learner's desire for clear, actionable knowledge
Yes.
that they can apply to their own lives.
Absolutely.
So for everyone listening, I hope you feel inspired to explore Bogle's approach and see how it can help you on your own investment journey.
Before we go, I'd like to leave our listeners with this thought. Consider how much control you really have over your investment outcomes. Is it about trying to outsmart the market, or is it about making smart choices and letting time work its magic?
That's a great question to ponder. It really gets to the heart of Bogle's philosophy and challenges us to think differently about how we approach investing.
Absolutely.
Well, thanks for joining us for this deep dive into the Little Book of Common Sense Investing.
Yeah, thanks for having me.
We hope you found it insightful and empowering. Keep exploring.
Keep learning.
And keep diving deep into the topics that matter to you.